Hello, hello. Good morning. Welcome to another ES Futures Trading video stream. Today is Friday, August 25th. It is 8:43 a.m. A little bit early than I usually do these things. I just wanted to complete this thing to highlight some things. Give you some update here. It's not going to be that long. What we have here is market profiles. Alright. I want to check the market profile before going to the bigger time frames. What's happening in the bigger time frames? We had Nvidia yesterday after the close. Notice where this low is or was. Right, the POC was bought from POC, and we had this typical. You want to know what short covering is? Well, this is short cover. You have the steam of the P and oh, come on, the loop of the P. This is the steam of the P, and this is the loop of the P. Right? That's a P. Very typical. Now we have. You may say, okay, well, this is also no, that's not. No. If any, this could be some form of short or long liquidation, which is the opposite, because it starts here, it comes down, and you have this formation here. Huh? It continues the next day. This is short covering. No, this is not short cover, because it starts from the opening. The opening is up here, it goes up, it grabs no excess here. And yesterday, even though I had all the information, all the pieces of information, I still was mesmerized by price. What is trading about? What is worth having all this information if I cannot use it right? I was so fixated in one piece of information yesterday that I completely miss the panoramic view. We have this non-excess high here. It's still there. We have coming from POC here. The peculiar thing that what happened to me yesterday is that I was fixated in this high here. When the market opened here, calm down here, it closed the gap. It opened up here, there was a gap here. The gap was closed. That was the first indication that this is not that, the market is not as strong as prices at advertising, coming back inside this range. The subsequent rally on B, what I did is, I saw the lack of volume. Okay, look at the volume. How volume decreases here, right? Relative to the previous day, was here. Okay, this is not some serious. This is not serious. Right? That's what I thought. This is not serious. This is just long liquidation of all of this inventory here. And when the market came back in here and was bought or sold exactly from overnight POC, which is also pretty much, we have 1, 2, 3 Y high here. As long as this take it, 2 ticks is considered technically corrected, but there is a lot of stops here. There's a lot of stops here in this area, and I have single prints here as well. That No, I thought that this could at least come somewhere here, or maybe trade in this area, take some of these prints before anything. Um, when it was sold from POC, I thought, okay, this is not serious thing, right? But what I underestimate is the power of momentum, right? Sometimes what happens or what doesn't happen is as important as what happens. And what didn't happen yesterday was really important because this piece of information, there was another piece of information that I completely forgot, right? Which was the tremendous amount of volume that happened here in this area. So, what I had this scenario. All the data was showing that this is short covering. The market is in short covering mode. Short covering weakens the market. But I was so fixated on this and the gap, right? And the gap here that I thought that may have some upside continuation, especially when this was bought, I guess was bought from here and started going higher here. It took me some time to realize, oh, this is, I didn't realize about this, about the fact that it failed when the market was was long gone. I did some trades to the downside when, let me tell you when. Because the market gave us many opportunities yesterday. There was so many weak intraday, right? When the market closed these distributions, the destinations was the opposite side, right? And every single level was being bought. This was being bought. There was another ones here. But I need to open. Oh, well, let me open this from this day. I don't know. Okay, look at this. Because as important, what you want to analyze is your failures, okay, as well. There was tremendous amount of stops down here. The potential firecracker effect down here. And the firecracker effect, once these stops are taken, it can take the market lower. Right? It closed the distribution. Market was being bought from this level, was breaking from every single one of these. Closed the distribution was bought, and this level was well. And this level, every single one was being bought, every single time was being taken. And I'm not saying the next time that we have these references, the same thing is going to happen, because we have to put everything in context, right? What was the context? The market is coming from is trending to the downside, is short covering here, rebalancing all this short inventory that's coming to the downside. The sell rebalancing here, the rebalancing happening in short covering mode, which weakens the market, because sometimes the market just is too low that it cannot keep going lower. It has to rally before it can go lower again. What we have today at 10:05 is Chairman Powell's speech to close or to open, or whatever it is, the Jackson Hole meeting. That's going to be very important. Now, all these shorts are long gone, this is gone, and we have here a spike now to the downside. This is important to me. Opening above the spike is a rejection of lower prices. Opening inside the spike is neutral. Open below the spike is acceptance and short-term weakness. No, this is shows some strength, at least in the short term. All right. And inventory is very short. This is no one's interest to kill the market the way it was killed, to butcher the market just the way it was butchered yesterday. Nobody wants that. It's not good for anyone. Now, the market is supposed to open inside inside range, inside previous day range, opening inside the range, advertised chop. We still have Jackson Hole meeting. The 4,000 is right there. My main focus right now is the opening. My bad. The base of the spike. At the opening is the base of the spike, right? Which is this thing. A spike is an action that happens so late, too late in the day, to see some acceptance or rejection of the movement during the session. It's just too late. It happened here, right? And now look where this buying or selling has been coming. K exactly from halfback. L pretty much K high. M L halfback. This is the signature of short-term trading traders here, right? This is for me. This is the laggard part of this movement. Another thing, look at the distributions that we have here. How many distributions this market has? Now look at this. Let's take a look. Got 1 here, 2, 3, 4. It's curious how this one is kind of like a halfback. Now this is just a piece of information. This is nothing here. This was a nuance as well yesterday. You know, this pullback came exactly to this piece of it. This is crazy, right? This is just we call this an aberration yesterday. The same thing. I can say the same thing about this high as well. I'm just looking at that. It's just the pull that the rally happens just to this high. It is to the tick. Let me check. Can you see? It's to the tick. Right there. This is incredible. Right? This kind of thing. This just to highlight who is doing what. Right? You know, big money. It's not going to wait. And this could be a coincidence, right? This could be a coincidence, but it's not going to wait the market come back to hard back to sell, right? Or even this. Look at this. Notice where POC is up here, and notice where the high of the regular trading hours is. It's exactly the POC. All of this movement, right? All of that movement it's just made by short-term traders, and the fact that it has low volume here as well is also tells me that it's short-term trading. And you know, we have Monday, Tuesday, Wednesday, Thursday, and Friday. Friday is a big day here. Right? If any adjustments happen, usually the adjustments are made in this day. This day usually is a quiet day. It was not. Look at what happened here. You know? More often than not, this is what I observe. Hey, Balbes, BTW, how are you, man? When we have this kind of events, let's say this Friday here. In this kind of markets, where the volume is low, where there is no bigger participants, the dominant, not that there is no bigger participant, but the dominant force are the very short time frame traders. We'll see some sharp movement to the upside, followed by another sharp movement to the downside, just before the event. In this case, Friday, right? What happened Friday? You have Chairman Powell speech to close and the Jackson median or median. Or it can be the opposite. Well, a sharp movement to the downside and then just recovery. It happens all the time. It happens all the time. Now the next thing, next week, what do we have next week? Just check this. Next week we have core PCE, which is a favorite instrument for the Fed. To measure inflation and non-farm payrolls. And a very, very significant event scheduled for next week. The context of all of these things also matters. Where the market is at right now. Crude falling, dollar is recovering. This is good for the market actually. There is, the trend. You can look at this trend here. Look at this trend here. And look at this trend here in dollar. All these markets trading, perfect trading, very mechanical trading. But this is what I am watching. This is what is catching my attention. How low the bonds are and where they are. Right at this low here. This is some kind of historical lows here. The interest rate. This could be a pivot here. There could be a pivot from this level, or if it breaks, it can fall really hard here. And why I'm following this is because when this kind of event happens, these tend to drag the market as well. What's happening in the overnight? There's some, actually has opened with a gap. The gap has been closed in the 10 and the 30 as well, and it's trading lower. Now, the bigger picture. Let's check the bigger picture here. The upside trend in the monthly has ended. Unless the market re-enters this range, there's some serious risk here of liquidation on the bigger time frame here. If the market comes below this, below this level, which is, by the way, is a weak level that we have here. This time frame money, or investment money, or trading money, that is the bigger time frame, these ones as well, they can start getting nervous. Right? I got this from Gene. Right? When there are quite a ease now, they're still less than 7%. When the market starts to break 7-10%, they start to get nervous here. The kind of event that happened in the short time frame that we have here, liquidation, it happens in all time frames, right? All time frames, fucking daily, weekly, monthly, yearly. It doesn't happen that often here or here, but happens, right? It happens. That might be the case if the market get too close to this level again. The kind of trade that has been going, just look at this, man. Just look at this. How many gaps we have down here. All of this long inventory from the current contract is gone, basically. This gone. If anything comes here, from here, it's going to be a stronger money that comes here. Now, I'm not 100% sure, but when long inventory is removed, the ones that enter to take or to replace that inventory usually are stronger hands. So far, or the week is about to start. It's not so far. It's about to finish. We have an inside bar. There is the probability that this could end as an inside bar. They may have break a lot here. We have this magnificent break here, very low volume though, but if the week starts or closes, or the next week starts with this bar as an inside bar, the traders go with the break. Whatever happened here, this is an inside. It's not a perfect inside bar. It would be better something like this, for example. We have a wide range and really small, really short inside bar. This is kind of like too much big. It's a little bit bigger than what I would prefer, but it's still an inside bar, right? Inside bar is a form of balance. What the market's telling us here is I need more information to do anything here. Before I do anything, I need to know more. I need more information. That's what the market is telling us here. All of this inventory has been liquidated. The market was in long liquidation mode here. Short covering weakens the market. And what this can do is remove some of this weak inventory here, and so the market can keep breaking lower or breaking further. The low here is absolutely mechanical here. Very mechanical low there. Exactly at 100. Exactly. Now the thing is that this market, I think the direction could be to the downside, but I think it's just too short now. It just went too much too far too fast yesterday. There's some rebalancing that may happen here. I don't know what. I think it's just it was too emotional yesterday. Multiple distributions are signed emotional markets. Longs being trapped, not hitting. I want to get out of here. Just get me out of here. I want to close my position. I am so much in the red. I want to close, and that is what fuels the movement, right? And then you have momentum that starts to pile on the short side, and you also have trading that think that the market has break too low, that it needs to, they buy just because the market is too low. There is nothing else there. Traders buying because the market is time to for a bounce, and they keep buying. Right? Traders are so accustomed to buy the dips that they just keep doing. They don't put things in context. And as we saw, they bought from this level, they bought from which was POC, with another one that's here, a triple low here. They bought from this level, they bought for closing, they bought for half, but every single level that was here from this day, the market stopped there. Stop was a strong selling just goes through that like hot knife through butter. It just maybe check it once, comes back to check it once, let's keep doing, very orderly selling. Market, those kind of money, those kind of selling, just don't come back. For example, you don't come back to this mechanic. They don't wait to sell from exactly this level here. That's my main concern. Now my focus into the opening is the spike. Now it happens that we have the spike right at the 4,000 as well. This is a magic number. Now century numbers are you have this kind of magic for traders. This is a number for sell. This is a number to buy. The market is going to pivot from here. The market is going to sell. There is nothing here in this level, but it has that magic. Right? Another thing from yesterday was there was no excess on this day. This was a poor low. That has been corrected. This low is weak. This low is also weak. This was poor, kind of say 3 levels out of 4 were very questionable. Now we have this mechanical selling here. This is I think this is the laggard part of the market from yesterday. What the market does, with it is at the opening, is what I am watching now. Okay, unless there is any question, I guess I'm going to call it a day. I wish you guys good luck today. I hope this helps. I hope this is useful. Um, Again, have a wonderful trading day. Stay safe out there. Be patient. There could be some rebalancing of this today. This is extremely emotional. The most important thing is coming at 10:05 with Chairman Powell's speech. Don't pay attention too much to what he says, but to what the market does with what he says. Well, it's 10:05. Consumer sentiment also could be something that can move the market today. All right. That being said, have a wonderful day. Stay safe. See you another day. Bye bye.